please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, very good morning. You're watching Trading Hour on CNBCTV18. I'm Ekta Batra and with me is Surbi Upadhyay. Well, it's turning out to be a good steady start for our markets this Monday. It is a truncated week considering that we do have a holiday tomorrow. But nonetheless, for the Nifty, we're above 10,700 and closing in on 10,750 as we speak. So we're up around 0.5% currently for the Nifty. We had the Midcap Index, which is up 0.7%. And if you really look at our performance this entire month, it's been spectacular for the Nifty. It's gained 6%. The Midcap Index has gained 8%. So really no complaints coming in there. Separately, a lot of stocks in focus today, and we will be discussing a lot of them through the show. So a couple of them which stand out include something like a Reliance Industries reacting to numbers, Axis Bank, which is now below its 200-day moving average. But separately, there are stocks such as HDFC, Kotak, which are in focus on account of the numbers which are coming out today. Hi, Surbi.
Hi, Ekta. Morning. Yes, absolutely. What a month it's been and what a way to sort of cap things off for April, really. If we talk about today's trade, the one factor that really stands out for me is that today it's like, you know, all your batsmen are performing. Your entire batting lineup is looking so strong today. So there's no complaint. Financials which are moving higher. You've got commodity stocks which are back, the likes of TCS, Vedanta, even a Hindalco, and of course IT continues its upswing. So you can see the kind of contribution that's coming in. Infosys, for instance, chipping in with about 8 odd points. Obviously, the financials continue to drive the market's momentum today. The only drag really is Reliance, as Ekta also pointed out. Otherwise, there seems to be absolutely no problem whatsoever. We've taken out the earlier congestion zone with a lot of conviction on Friday and only building on that today. So it's really looking like a solid morning as of now. Well, on that note, let's welcome in Sudarshan Sukhani and get a technical perspective going on things so far. Good morning, Sudarshan. So what is your reading of the picture and the fact that, you know, it's quite steady as of now?
Yeah, good morning. See, the markets have broken out of a trading range on Friday morning and rather decisively. So traders should be long. They should have been long on Friday. There was an opportunity to go long today morning and also go long as we speak. My point then is that once a trading range breaks on the upside and the trend is already up, we do not give a target for market rallies. We simply say we are in here for the ride, stay on the long side, buy the Nifty bank which is outperforming and likely to outperform the Nifty, and buy the Nifty. So stay on the long side of the market, have the indices in your position for a carryover trade, not just for today. Okay, well, what about stocks, Sudarshan? Well, any number of stocks. I think today is one of those, you know, dart throwing days. Close your eyes and throw a dart and you will get something in it. But just on a more serious note, Midcap IT is doing very well. So Hexaware is a buying opportunity. I think most Midcap IT stocks, Mindtree, KPIT are buys. So we have just selected Hexaware as a slightly better option for the day. There's best marginal difference between them. The theme is to buy Midcap IT. The second stock I am suggesting is again for buying, that's IndusInd Bank. My sense is that IndusInd Bank is going to do what Yes Bank did a few days ago, 2 days ago. So we want to be positioned for a ride on the upside here. And finally, we have ITC, that big boy, which is today emerging as a buying idea. It's come out of a shell after a long time. Once it starts moving out of this trading range, then maybe more upside here. So stay on the long side and 3 buy ideas. Okay, we have some queries from our viewers as well, Sudarshan. So if you could help out these individuals. Aditya has 500 shares of Sona Koyo. He bought them at a price of 75 rupees. Wants a long-term chart check on Sona Koyo. Well, the long-term chart check is upbeat and bullish. So you should hold on to it. Do not worry about any short-term fluctuations that may eventually come. That happens because 2018, in spite of the rallies we are seeing, 2018 may be a dull year. But for the longer term, for the 2-year time horizon, the stock is well poised to maybe increase 50% or even more. So hold on to it. Okay, and we have one more query coming in. Jay has 20 shares of CEAT, which he's bought at 1833, 25 shares of JK Tyre at 182, and 50 shares of Tata Motors at 467. So there are 3 queries really which have come in for you, Sudarshan. What is the way forward, with the caveat that CEAT is coming out with numbers today as well? Well, the way forward is for a longer period of time, 1 year or 2 years. So today's numbers will not matter. Between CEAT and JK Tyres, CEAT is the better option. So independently, CEAT is a hold, and when you compare two tire companies, JK Tyres and CEAT, CEAT comes out much better. So sell JK Tyres, hold on to CEAT, be a long-term investor in CEAT, and you will get some rewards. The third stock is Tata Motors. I have never been upbeat on Tata Motors when it was 500, 550, and I'm still not upbeat. My own sense is that the stock chart continues to be bearish. Now the investor has to make a call on what he wants to do, he or she wants to do. But my view is bearish on Tata Motors.
Okay, I'm suffering quite a bit of a loss, and Sudarshan doesn't see a recovery in sight, at least immediately. Well, you can, just a reminder, you can keep tweeting your questions to us. So whatever stocks you want to discuss at CNBCTV18 News as well as CNBCTV18 Live. Those are our handles. Of course, don't forget to add the hashtag, which is AskCNBCTV18. And our technical experts will be offering you advice on your trades and on your investments.
Okay, well, let's get in some F&O strategies now. We have Rahul Shah of Motilal Oswal who's with us this morning. Rahul, hi, morning. Over to you then. What are you recommending, stocks as well as index?
I think financials, we've seen a good rally, and I think it continues to look very good, and especially in private financials. So private sector banks, I think they've been doing quite well. So in that space, I think my view also matches along with Sudarshan about IndusInd Bank. So I would go long on IndusInd Bank. This is the only stock which has again come back to the new highs, and obviously good longs built up in this futures. So I would go long in IndusInd with a stop loss of 1868 and target of 1950. Secondly, we've seen basically all large caps are doing quite well in last few sessions. So I would still stick to a large cap. So in that infra play, I think L&T continues to give a fresh breakout. So I would buy L&T with a stop loss of 1375 and target of 1450. And third is Mahindra & Mahindra. I think this stock, after a long time of consolidation, and have seen a up move in last two series. So I think still I mean a good long built up and technical breakout at this levels. Again, stock is at 52-week high. So I would go long on M&M with a stop loss of 860 and target of 915.
Equity markets are roaring away this Monday. Let's find out what's happening in the world of commodities. Manisha is joining in with a roundup of all the action. What's happening in your side of the universe, Manisha?
Well, plenty, but most of that really is in the sense of profit taking. You have seen this week start on a weaker note. Remember, more than 100 countries would, of course, be taking off on the 1st of May. And ahead of that, we have seen Japan and China, in any case, being shut today. So the Asian markets are looking at lower volumes and some profit taking as we see it right now. So starting with the crude oil prices, and we are down 0.8% on that one, and that is on the back of the increase in US inventories, increase also in case of the rig count, which is at 825 drilling activity now, which is the highest since the month of March in 2015, and that's really pulled the prices on the weaker side. But this month is going on a positive note, and last day of the month, and we are nearly 6% up for the Brent prices. 4,500 is holding for the MCX prices as well there. Take a look at the metal space, though, and that has been quite a mover, too. We have seen profit taking come in across that sector. The only couple of gainers, of course, are in copper and aluminum, and that is because there are supply concerns in both of those. The other metals have been slightly on the weaker side today. Of course, there is the U.S. non-farm payroll data, the U.S. Fed meeting, and the manufacturing numbers in this week, and that is where much of this market would take direction from. But MCX came out with their numbers last weekend, and we have seen a positive growth quarter-on-quarter basis. Joining to talk about that and much more now is Mrugank Paranjpe, MD and CEO at MCX. Mrugank, hi, good to have you. First of all, tell us, because the numbers have been really good on a quarter-on-quarter basis, what really has worked for you in sense of volumes, cost, and other income, etc.?
It's very pleasing to sort of announce the results this time. Fourth quarter has seen a very good improvement in our results. Our total income is at about 96 crores. Profits have gone up to 34 crores. And I think we are also very pleased that the board has approved a dividend of 17 rupees, which is increase even against what we had done last year. Overall, what really helped us through this quarter was three aspects. One, an overall rally in terms of all products, all the asset classes, which helped our revenues go up. Second, we had a better performance even in our treasury income. But most importantly, I think something which we have committed to our investors and to everyone is that we will manage the manageables absolutely well, and therefore our costs are showing again what we had promised, a great control. So we've stayed flat for the full year. Our non-revenue linked costs are just about 1.5% up. We had always said that we will maintain this below 3% on a year-on-year basis. And even for the fourth quarter, we have had a great cost outcome. So good revenues, good other income, and absolutely great story on costs, together giving us a very good fourth quarter result.
Elaborate some more, Mrugank, in sense of the volume growth, as you mentioned, has been one of the major drivers for the kind of profits that you have seen. So where exactly has this volume come in from? What commodities have done well for you?
So I think when I mentioned the overall growth, that's what I was talking about. The volumes have really looked up on a month-on-month basis. So March was as good as February. February was better than January. Overall, volumes were up more than 17% in terms of ADT for the quarter. And as you would be tracking, and as most viewers would know, April is looking even better. So I think it is the volumes across the board that have looked up. Base metals and energy continues to outperform. Bullion is looking up, but not yet as good as we would like it to be. But that's something which gives us also the confidence that there is more growth which we can look forward to. But specifically talking about the last quarter, I think energy and base metals have again given a stellar performance, which has really aided the ADT growth by about 17% in the last quarter.
And the new kid on the block, clearly, that you have to have account for the previous quarter has been options. What has been the feedback on that? What have been the volumes? And clearly away from what could be desired there, but how are you pushing that up?
We have mentioned this when we launched the product and in the last 6 months that there was an overwhelming feedback that we would need to have some liquidity enhancement for really getting options ticking. There was also feedback that we needed more products. On the second one, as we have said, we have applied to SEBI. We are very hopeful that we will get some approvals very soon. And as soon as that happens, we will have more contracts coming in. That would give investors availability of multiple products to trade, which is something they're looking for. More importantly, I think we just launched our liquidity enhancement schemes. This was for the gold options. 3 days into that scheme, but I think the results have been extremely encouraging. So the open interest has almost gone up by 75 to 80%. The trading volumes are really looking very, very healthy. We've crossed 400 crores. We're probably touching 500 crores on a notional basis already. And therefore, we believe that the liquidity enhancement scheme will really give the much needed fillip that we wanted in terms of getting the volumes up in options. So from our perspective, all looking on plan. We think this quarter we will have more products. We will get liquidity in gold options, and that would create the sort of runway that we need for the first half of the year, where we have always said we will concentrate on getting all the options product up and running in the first half of this year.
All right, that's good to hear. Thank you so much, Mrugank, for joining us and telling us what you really have done and the expectations, of course, as MCX moves forward. It would be just a couple of quarters ahead that MCX also would be looking at competition from both BSE and NSE, who are looking to launch commodities as a segment in derivative market. So clearly more preparedness coming in from the exchange.
Okay, all right, Manisha. Thanks very much for that. Well, just want to point out the kind of traction that we're seeing on Yes Bank. It's another day post numbers where the stock is gaining. So it's up around 2% and if you look at it and put it into perspective, the stock has gained around 17% on a month-to-date basis. Remember that the numbers came out last week itself. But the other stock which continues to be in focus is Fortis Healthcare. And in fact, we spoke to Rana Kapoor of Yes Bank, which owns 15% stake in Fortis, and he says that it's a very attractive asset, and remember they are the single largest shareholder in the company. So let's listen in to what he had to say and we'll be back.
It looks like the best winner will take over this asset, and I think this asset is a very attractive asset, and it will repay all the lenders. The intentions of the board are good. The intentions of the new members of the board are also very good. And I'm very deeply convinced there will be a very, very good resolution on this. You know, we are not active in this process, but at the same time, what we are observing is that there is more improving transparency, improving disclosure, and end of the day is going to be very competitive, and it will fetch fantastic value for all minority, otherwise all investors, so it seems. The most likely scenario is that the main holding company should be bought out intelligently, and then the future businesses can be adjusted with the new buyer's board and with the shareholder approvals accordingly. And there is very, very deep value in this asset.